All right, thank you very much, Sarah, for getting this going. Welcome, everyone. Welcome to I think the fourth or fifth now edition of ACA Reporting with Employee Navigator. If you are in this training, you are a user of Employee Navigator and you are getting ready to do your ACA reporting. I also want to thank you very much for taking time out of your lunch hour to be here for this. For those of you that are new to this presentation, this originally was a lunch and learn where we brought you into the office and had lunch and had a real meeting with some food, and so this was naturally always a noon presentation. At the end, we're going to ask you for some feedback about the presentation, and one of the things would be great to know is if a different time for this would be more convenient, so please let us know about that. So I know I have some regulars that attend this seminar every year. We've also got some new folks this year, which is great. For those of you who don't know me, I'm Keith Dunlop. I'm the Director of Compliance with Morrison Garritano Insurance. I've been in this role for coming up on 7 years now, obviously primarily concerned with healthcare compliance, everything concerning ERISA, Department of Labor regulations, obviously the Affordable Care Act, and this time of year, the annual ACA reporting, everybody's annual fun task. I plan for this to be pretty interactive. I don't love presentations myself where I'm an attendee and I get talked to for an hour and a half, so I'm going to pause a lot for questions. Please ask your questions in the Q&A section. We will keep a keen eye on that and try to answer questions as they come up. There's also going to be a couple of poll questions throughout the webinar. And that'll hopefully break things up a bit. I will make it a point to take a break at about the halfway point so we can just take a breath and take care of business. And I plan to be on time and with luck a little bit early this year. So we'll see how that goes. So let's dive in. We've got a lot of ground to cover. We're going to talk about who files what and the current 2022 deadlines. I do not have a legislative update this year because there's nothing to talk about. However, I do have a very important update about penalties and enforcement. The landscape has changed dramatically with IRS enforcement of the ACA. We'll go over, obviously, Form 1094C, the transmittal form, the employee forms, your 1095C, a very brief coding overview. This is not the coding seminar. That was yesterday's webinar. If you would like a copy of that more deep dive into what the codes mean and how you code 1095s, ask us for that recording and we'll send that out to you. And then obviously a click-by-click Navigator tutorial to show you how to get your stuff processed and transmitted to the IRS. So very quickly, who files what? Most of you in this room are aware of this. So if you're an applicable large employer, more than 50 full-time employees in the prior calendar year, you're filing forms 1094C and 1095C. I do get questions about what are the insurance companies doing? Don't they do this reporting? The insurance carriers do the B series forms, not the C series forms. So if you are a applicable large employer, your employees are actually likely getting two forms, one from you and one from the insurance carrier. And I blew past our cue for the first poll question, Sarah. Okay, so we'll slow down here so I don't blow past our cues. So first poll question of the day is, are you aware that the state of California has a health insurance mandate? And it looks like most everyone is aware that there is a health insurance mandate in the state of California. When the Trump tax bill was passed, I believe 2017 now, it did away with the individual mandate on a federal basis. However, in response to that, several states, including California, instituted a state-based mandate. The reason why we talk about this is because the state of California wants 1095C data. They want your 1095-Cs so they can enforce that insurance mandate. The important thing to remember, though, is if you are a fully insured employer, which I believe is everybody in this room, you do not have to file anything with the Franchise Tax Board. That information will be transmitted from the insurance carriers to the Franchise Tax Board. So only self-insured employers have to do this. Fully insured employers do not. However, there's one little wrinkle here. We know that the IRS has extended the deadline to provide 1095-Cs to employees to March this year. The general deadline is always January 31st, but they've always extended that, and they did again this year. However, if you look at the filing instructions from the Franchise Tax Board, they say that employees must be provided with their forms by January 31st. So even though the federal deadline is March, you need to be aware that the state deadline to get those forms out is January. So you want to get all that stuff done before the end of this month. Here's a slide on those deadlines, which just talks about what I just mentioned. 1095-C forms to employees based upon the federal deadline is March the 2nd. However, California employees are supposed to get their forms by January 31st, according to the Franchise Tax Board. I've included the FTB publication number here if you're interested in going to their site and pulling that down. If you're mailing stuff to the IRS by paper, you have until February 28th. Electronic filing is March 31st. However, since you're using Employee Navigator, because the transmission and the mailing to the employees is all done at the same time, you're going to have all this done by January 31st. And we've got one question that has come up in the chat. So let me close this box. And I was in the training yesterday. Is this the same? No. So, well, it's partially the same, Angela. So the first part of this training is some of the background information that I covered yesterday. However, the bulk of this is actually slides from the Employee Navigator platform and how to process your reporting in Employee Navigator. I think it's good to attend both sessions, quite honestly, because if you are, whether you're using a technology platform or you're filling forms out by hand, you still have to be knowledgeable in how to audit those forms and how to know what the codes mean. So I think it's great that you attended yesterday, and now you're going to be, an expert in this by about 1:30. Okay, I didn't see any other questions. So just a quick update on penalties. Just want to focus on the ones in red. These are the ACA employer mandate penalties. The A penalty for failure to offer coverage is now up to $2,700, and the D penalty for failure to offer affordable coverage is now $4,060. How that looks for a full-time employer with 75 employees that fails to meet that mandate, they pay $2,700 on 45 employees because you get that 30 employee discount, or an annual penalty of $121,500. These numbers get really big, really fast. Just in the period of 2016 to, I believe, 2018, I have seen $1.7 million in proposed penalties to Morrison Garitano clients. Nobody has had to pay any of that money, but the penalties are significant. And on that vein, I want to talk a little bit about enforcement of the penalties. This landscape, as I mentioned, has changed dramatically. There was an Inspector General report from the Treasury Department in 2020 that evaluated how the IRS is doing in collecting ACA penalties. The IG was highly critical of the IRS's collection efforts, pointed out that of the $17 billion in proposed penalties, the IRS only collected $749 million. As a result of that, the IG recommended increased enforcement efforts, There's a projected penalty revenue now for 2017 of $13 billion and 2018 of $15 billion. In addition to that, the Biden administration has increased the IRS's budget for enforcement by over 10%. The other major thing that's happened is, up until now, as long as you were able to demonstrate to the IRS that you made a good faith, reasonable effort to comply with your ACA mandate, you were pretty much relieved from penalties that were proposed upon you. That is now over. The IRS has announced that good faith relief from penalties has ended with the 2020 tax year. That means as of the 2021 tax year, penalty collection is going to get much, much more serious. In addition to the penalties that we're aware of, the A for not offering coverage and the B penalty for not offering affordable coverage, there are two other types of penalties that people are typically not aware of that we're starting to now see, and they relate to your filing of your ACA reports. There's one penalty for failure to file timely with the IRS, and one for failure to furnish forms to your employees. The penalty is $280 per form, so not a inconsequential penalty. However, it's effectively a double penalty because the IRS, if you fail to do your reporting, the IRS penalizes you under both of those sections at the same time. So it's actually a double penalty. There are some caps. There's a $1.1 million cap for small employers. Those are ones with, I believe the bar is $5 million or less in gross receipts, and then a $3.3 million cap for larger employers above that. But be aware of these new types of penalties. And another bit of bad news is that we now have confirmation from the Chief Counsel of the IRS that there is no statute of limitations for collecting ACA penalties. On a typical tax return that goes to the IRS, there's usually a 3-year statute for the IRS to come back and collect any penalties or assessments. That's not the case for ACA reporting because it's been found in the courts that ACA reporting is not a tax return. Therefore, there is no statute of limitations. That means the IRS can go back as far as the 2015 filing year for any ACA penalties. And this is concerning to me because initially for the first few years, all we really saw was penalties on the A, the failure to offer coverage. I have not yet seen the IRS propose penalties for the B penalty, which is the failure to offer affordable coverage. My concern is you may be an employer who received one of those A penalties in a prior tax year and got out of it and may be thinking, I'm good now. I don't have to worry about that anymore. But the IRS can still come back and look at you for the B penalty. So as a result of this, it's critically important to make sure that you are filing your reports on time and accurately. If you're using third-party vendors, make sure you're auditing what they do before they transmit to the IRS. Correct any inaccurate information as quickly as you can. Keep everything. You've got to keep records of all of this in a way that you can access it for both audit purposes and also defending yourself if you get a penalty notice. And also keep records of your benefit information. Keep your contribution rate charts. Keep your plan information to show that the medical policies meet all the standards of ACA. You may need that information to prove that you made an ACA compliant healthcare offer. Finally, was that the last of my bad news? Yeah, that was the last of my bad news. So now we're going to move into a review of the 1094C form, but before we do that, we have one other poll question for you. And this is going to test your knowledge from a few slides ago. What's the IRS projected penalty revenue for 2018? Yep, most of you are on the right track. It is $15 billion. It's a big number, and it's a concerning number because we talked about the fact that the IRS only has collected in past years $700 and some odd million. So this is a significant increase in that projection. Okay, so a quick overview of the 1094-C transmittal form. This is the form that goes to the IRS with all of your 1095-C data. Here's the form. The form hasn't changed much in the last couple of years. Part 1, super easy. Name of the company, your tax ID number. Do make sure this matches any other tax filings, so it should be the same with anything else you're providing to the IRS. Question 18, the total number of forms that are going with this transmittal. So you may be submitting one of these for corrections, and maybe there's only 2 corrected forms you're sending. In that case, the answer would be 2. But in most cases, this number is going to be the same number of the total 1095s that you're submitting for the company. Is this the authoritative transmittal? This box needs to either be checked or unchecked. If it's checked, that means yes, this is the authoritative transmittal. For 99% of the time, this is yes. The reason why this is asked is you may have a company that has different divisions within the same company, and for whatever reason, you may want to be submitting 2 separate 1094s and a separate set of 1095s. You can do that for the same company, but when you do that, one of those sets has to be the authoritative transmittal. Question 20, how many total forms being filed by this applicable large employer? This is likely the same number as question 18. I want to highlight the questions that are circled here and talk a bit more in detail. So 21 is a really important question. 21 is asking you, is your company part of a controlled group? An aggregated ALE group is another word for controlled group. What that means is that you have common ownership with another entity with a different tax ID number that has employees. If you have that situation, you must answer yes to this question because the ACA reporting applies to all of those entities, and they must be connected when the data gets to the IRS computers. A very brief overview of control groups is when you have certain kinds of common ownership between multiple entities. The rules are highly complex. We don't have time to go into those in detail here, but just know that if you do have common ownership between multiple entities, those entities are now seen as one employer for purposes of both ACA compliance and other compliance regulations. And because of that, the regulations under the ACA, including making offers of coverage of insurance and filing your ACA reporting, applies to all members of that control group, even if a member of that control group has less than 50 full-time employees. You could have a situation where one member of the control group has 50 or 60 employees, and you have this maybe smaller company that's related and connected through common ownership that maybe has 10 employees. Sometimes people think, oh, well, that one with 10 doesn't have to comply with the ACA and doesn't have to do ACA reporting. I'm here to tell you that that's not accurate, and that smaller 10-life company is now part of the larger organization for this purpose. The other thing I want to talk about is qualifying offer method. I get lots of questions about this checkbox. Should we check it? Should we not check it? A qualifying offer of coverage is a special kind of medical insurance offer, which primarily has a driver related to the cost of coverage to the employee for employee-only coverage. And that cost of coverage can't exceed more than the affordability percentage applied to the Fed poverty line earning number for that given tax year. So for 2021, that FPL figure is $12,880, and when you apply the affordability percentage, which for 2021 is 9.83%, you come up with $105.51. If your offer of coverage costs the employee below that amount, you're making a qualifying offer of coverage, and it allows you to do alternative 1095C completion, where you only have to put the offer code on line 14, and you don't have to provide the IRS with any information about the cost of the coverage, and you don't have to put any safe harbor information or codes on line 16 of the form. The box on the 1094C, where it asks you if you are using this method and if you're certifying it, basically is telling the IRS you are using code 1A for employees on your 1095C, and the certification allows you to do that. So if you're using code 1A on your 1095Cs, you should be checking that qualifying offer method box on the 1094C, and that box should only be checked if you are making a qualifying offer of coverage with this particular cost. If your cost of coverage is below this, you can't possibly be making a qualifying offer of coverage, and so that box has to stay blank. Part 3 of the 1094C, this is probably the most critical question that is asked on the form. Column A, entitled Minimal Essential Coverage Offer Indicator. What it really is, this is the question that is asking you, did you meet your employer mandate by offering coverage to 95% of your full-time staff and their dependents? Yes or no? This has to say yes. If this says no, you're basically telling the IRS that we failed to meet our employer mandate, and you are guaranteed that at some point in time you are going to receive a penalty notice if any of your employees went to Covered California. Remember that the trigger for the ACA penalties is employees going to Covered California. So if any of these boxes say no, and if you have any full-time staff that go to Covered California, you are going to get a penalty notice from the IRS. So when you're auditing your 1094C, which we're going to look at how to do in Employee Navigator, you want to make sure that this says yes. Now, I'm not suggesting that just should blanketly say yes in all cases, because if you actually have failed to meet that 95% threshold for whatever reason, you definitely want to be providing accurate information to the IRS, and one of these months may be checked no. But you need to understand what the seriousness is of this particular area of the 1094C. The rest of the form is pretty straightforward. Column B, your total number of full-time staff each month. Column C, total employee count, that's part-timers and full-timers combined. Column D goes along with that question on page 1, where it asks you if you're in a controlled group. This checkbox tells the IRS what months or month you were in a controlled group. And then lastly, if you're in a controlled group, the 1094C requires that you provide the name and tax ID for any other associated connected entities. Any questions about any of that? Okay. So the 1095, again, has not changed much over the last several years. The only real change happened last year, where they've added this employee age field, and they've also added a zip code field. These only have to do with employers that are offering individual coverage HRAs. Nobody in this room is doing that, so this is really not something we need to spend too much time on. Part 1 of the form, super straightforward: the employee name and social, name of the company, tax ID number, addresses, the name of the company and the tax ID. That obviously should match your 1094C. Here's part 2 of the form. This is the coding information that goes to the IRS to inform the IRS about the offer of coverage and what the employee did with that offer during the entire year. This is not the coding seminar, that was yesterday, but just briefly, the codes will basically tell a story about the medical care offer situation for this particular employee. So on this particular form, we have 1H, no offer of coverage, paired with 2A, not employed. It's a great, valid reason for not offering coverage to someone if they don't work for you. No offer of coverage, 2D, waiting period, totally normal. And then here we have an offer of coverage, 1E, cost of coverage is $150, and we know that 2C means that the employee has enrolled in coverage. That condition stays the same, and it looks like the employee in this sample left employment sometime in October, and so now we're back to 1H2A and 1H2A for the rest of the tax year. One minor change: the plan start month is now a required field. Navigator populates this for you, so you will now see the month that your benefit plan begins on the 1095. These are the codes. These are new codes related to the individual coverage HRAs. Again, we're not going to cover these. They're here, but they don't pertain to anybody here in this room. Part 3 of the 1095C, this is only filled out if you are a self-insured employer. The IRS wants to know the names of everybody who's covered under this employee. The employee goes here, a wife, a child, any other dependents. This is where the 1095B form comes into play from the insurance carriers. So if you are a fully insured employer, this part of the form is not being filled out, but the IRS still wants this data. They're getting this data from the carrier on the 1095B. That's why that form exists. Here's your codes. The handout that you were provided, and I don't have a copy on my desk, so I forget the page number. There is a 1095C coding cheat sheet in there as well. I want to just point out here some of the more common codes I would expect to see on a 1095C. The offer codes, so 1A we know is the qualifying offer of coverage. 1E is the code I want to see most frequently for a normal offer of coverage that's more than that 105.51. This is coverage that meets minimal essential coverage and also meets minimal value to both the employee, dependent, and spouse. Spouse offer of coverage is not required by law. However, most employers do offer spouse coverage as a buy-up to the employee. As a matter of fact, dependent care is usually a buy-up to the employee. 1H, no offer of coverage. And then these codes are paired up with the corresponding line 16 series 2 codes. We saw in the 1095C example, 1H paired with 2A. No offer of coverage because the employee is not working for you yet. Totally valid coding. 1E pairing up with 2C, the employee is enrolled in coverage. 1H paired with 2D, no offer of coverage because the employee is still in a waiting period. Or maybe it's a variable hour employee that still is in their look-back measurement period. Then you have your safe harbor codes, which I've put in green here. These are money codes. That's why they're in green. So these are the codes that go on line 16 when your employees waive coverage, but you need to demonstrate to the IRS that your offer of coverage was affordable based upon one of the 3 affordability safe harbors, which we're going to talk about on this next slide here. You must select one affordability safe harbor to use across the board on a class of employees. Typically, it's across the entire population of your company, but you may have, say, an executive class and a non-executive worker bee class. You can actually have two separate affordability safe harbor arrangements for those different classes. But the key here is you have to pick one generally to use across the board. So your affordability safe harbors are one of three, either Fed poverty earnings. This is the Fed poverty earning level for the given tax year divided by 12 with the affordability percentage for the year applied to it. For 2021, that's 105.51. This is a pretty hard bar to meet for many employers, because that means that if the employee is only paying $100 or whatever for their insurance, the employer may be paying the lion's share of the balance of that gross premium. So this is a hard bar to meet. Rate of pay provides more headroom when that occurs. Rate of pay is based upon the hourly rate of pay of the employee, and there's a statutory calculation. That rate of pay times 130 times the affordability percentage, and for 2021, that puts you at $178.91. I get asked occasionally, why 130? What does that mean? 130 is the IRS equivalent of a full-time staff person working 30 hours per week. They believe that the 130 is a fair equivalent of that on a monthly basis, and so that's the statutory calculation. And Jenna, we will, I believe there's a link to the reporting guide in the chat, and we will definitely get that that guide to you at the end of today, at the end of the presentation. So the last safe harbor is W-2 safe harbor. This considers the employee's W-2 earnings for the year. That's that box 1 number. However, it's not just taking that number and dividing it by 12. The W-2 safe harbor is adjusted earnings, and this accounts for the fact that you may have an employee who doesn't work for you for the full 12 months. So that W-2 number is adjusted, and it's adjusted by a ratio of the number of months the employee was eligible for coverage divided by the number of months the employee was employed by you. I'm not going to force you to do any math today. That would be mean. But if you go back and look at this example and do the math, you'll see that we've worked out here that somebody who worked for the employer for 8 months with W-2 figure of $15,000 had an affordable offer of coverage when you work out all the math. So takeaway here is that you've got to pick one affordability safe harbor. So Kathy, the safe harbors are just for the employee, correct? So the 1095-C is really only about the employee and what offer of coverage you made to the employee. You have to offer dependent coverage, but there's no cost requirement for the dependent coverage. It's usually a buy-up for the employee. So here's a typical 1095-C. Again, here's somebody who was hired in April as a full-time staff person. The company's waiting period is first of the month following 60 days of employment. They're offered compliant health care coverage with a cost of $125. The employee enrolls in coverage, and then they leave the employment sometime in November. So we have here your initial codes 1H2A, no offer of coverage, not employed. Person comes on board in April, but now they're in a waiting period, so we have 1H2D. And as of July, the employee now is receiving their offer of coverage and they enroll. So we've got 1E, the cost of coverage to the employee for employee-only coverage is $125. 2C is enrollment, and then that condition remains the same until the employee leaves, and then they're gone in December, so now we're back to 1H2A. So again, we're going to spend most of our time today looking at Employee Navigator. We're not going to spend too much time on the code definitions and meanings and code combinations. So reach out to me after this webinar if you have specific questions about that. And we'll also get you a recorded link to yesterday's webinar, which was a deep dive on the codes. And just want to make sure I didn't blow through another poll question, Sarah. I don't think I did.
We did have one on the qualifying offer of coverage.
Okay, great. Let's go ahead and throw that up then. All right, so qualifying offer of coverage cannot cost the employee more than blank. So yeah, it's 9.83% of the Fed poverty earning number. So that is the driver for qualifying offer method. It's that federal poverty level. For 2021, $12,880 divided by 12, and that affordability percentage of 9.83% applied to that number. That's the key indicator if you're making a qualifying offer of coverage, is that cost standpoint. Okay. So we're going to get into now actually looking at Employee Navigator. And I always recommend the clients first go through some pre-reporting steps, and this is just verifying that all of the HR data that's in Employee Navigator is correct. All of the population tasks of putting codes into the 1095s and filling out the 1094C is driven by the accurate HR data that's in Employee Navigator. So that if the data is not there, the forms are not going to be filled out correctly. It doesn't work. So I recommend you run an ad hoc report, verify dates of hire and terminations for employees, update those if needed, update employee ACA classifications, look at earnings if people have had pay raises, make sure those are in there. If you're using W-2 Safe Harbor, you have to feed Employee Navigator that year-end W-2 data. It's not going to do the math correctly if it doesn't have that W-2 data. We have to have complete employee addresses, otherwise the forms don't get to the employees, and obviously we need to have accurate enrollment information so that the correct codes go into the 1095s. The way you do these ad hoc reports is you go into the Reports menu in Employee Navigator. I like to run a column-based report, and then you simply pick the fields you want to see. You're going to want to see fields like the social name, first name, last name, date of hire, termination date, ACA classification. On this slide, if you see under fields that's circled here, you have a pull down for employee data. There's also a pull down there for enrollment data, and you would pick the medical come on date and the medical come off date to verify the enrollment, and verify all that information and make sure that's all correct. Contact us if you need some help with this. Next, you want to make sure you've cleared any HR pending actions, and to do this, you go to the ACA tab, Eligibility Dashboard, and next to this blue box that says HR pending actions, if there is a number next to this box, then you need to finish some HR tasks for some employees. When you click on this box, here's a larger slide to show that box here. When you click on that blue box, you're presented with a list of employees that need to have some action taken. And you simply click on the little, these have a name I never knew, I don't know what it is, these little 3 blue dots. You click on those blue dots and you either finalize what Navigator is saying the eligibility status is, or if you need to add hours of service, you can do that. Pardon me. You can also override the employee as ineligible. You need to take one of these actions in order to clear these out. And again, contact us if you have any questions about how to do this. The other thing that I want companies to pay attention to is your FTE calculation from 2020. We found that because of the pandemic, a number of clients that were applicable large employers before the pandemic are now not in 2021 because of a drop in staffing during those COVID months. So you may have a situation where you were an ALE before, you're not an ALE for 2021, and then maybe you've added staff back as the pandemic has gotten better, although that's a relative statement to be made right now. But you need to check this just to make sure. If you are not an ALE for tax year 2021, you do not have to do any ACA reporting. So there's a calculator, and you find it in the ACA section, and you go to the ACA console. This is on the left side of your screen when you're in Employee Navigator, and click on ALE calculator, and it gives you your numbers. Now again, this is data driven, and the numbers are only going to be accurate if you have all of your folks in the system and if you have added hours of service to the system for all of your part-time employees. This non-FTE total hours line you see here, that's hours of service by non-full-time employees, your part-timers and your variable hour folks. If you're not adding those hours of service into Employee Navigator, this computation is not going to be correct. But do take a look at this just to make sure that your ALE status is maintained for 2021. You also want to check, we will have likely set you up in an insurance program that's affordable, I would assume, but you can check it. You can stress test whether your cost of coverage to employees is affordable. Employee Navigator defaults to the rate of pay safe harbor, so that means you can't test FPL and you can't test W-2, but you can test rate of pay. So you simply pick your low-cost plan, which is typically a bronze plan, and the system will tell you what the cost of coverage is for employees for that particular plan, and whether you have any employees that have affordability issues. If you do, you can click on this blue link, and it will take you to a list of those employees that have affordability issues. This is typically an HR data problem. Either a rate of pay has not been updated, or there's been some other HR data error, but this helps you diagnose where those errors might be. I also encourage you to double check that your low-cost ACA plan has been properly tagged. This tagging has to happen in order for Navigator to do the math behind the scenes to know if, one, that you're offering affordable coverage, and two, what codes to put on the 1095-C. We will likely have already done this for you, but just it's a good check to go in and make sure that that we've done it and that we've done it correctly. And lastly, verify what your affordability safe harbor is and see what's currently assigned. You should know what your affordability safe harbor is. You should know it's being used as the liable employer. The safe harbors can be assigned to everyone. That's everybody in the system. And again, as I mentioned earlier, you can assign different safe harbors to different classes of employees. But you do want to double check to see what affordability safe harbor has been currently assigned, and if that's the correct one for your current situation. Maybe last year you were making offers of coverage at $100, and your safe harbor was safely FPL, Fed Poverty Earnings, but now you're not doing that, and maybe now the cost of coverage is more than that $105, and you have to go back to rate of pay. This is where you can confirm if that safe harbor has been correctly assigned. So moving on here, first, any questions about any of the pre-review steps we've covered so far for Navigator? Okay, so the next thing you want to do is just verify that your company information is correct. This is what goes on Part 1 of the 1094-C. We will have likely already filled this out for you, but you just want to double check that it's correct. Make sure the company name is all correct, the address you want to use, and your tax ID number, obviously. This is, if you scroll down the rest of that screen, the contact person, this is who you want to be authorized for the IRS to talk to if they want to call and ask any questions. And then the optional certifications that we talked about already from line 22 of the 1094-C. Are you using qualifying offer method? Do you have union employees? The other thing I want to talk about just really quickly is the question here, do you want to display the 1A, 2C code combination on 1095s? Remember I talked about that when you're using code 1A for qualifying offer method, no other information is put on the 1095-C. There's no cost data on line 15, and there's no safe harbors or any other Series 2 codes on line 16. However, you can optionally force the system to put code 2C, which is the employee is enrolled code, on line 16 of the form. I'd like to see that for audit purposes, even though it's optional. So for clients that are using code 1A, I typically check this second box. And then lastly, on this slide, the transition relief, the 98% offer method, there's really no reward for doing this. Even if you are definitely offering coverage to more than 95% of your staff, this certification really only provides one benefit, and it is that you don't have to provide the IRS with detailed employee count information on the 1094. There's really no other benefit to it. I typically don't recommend clients check this because there's really no point to it. Okay, so here we go. So the rest of the webinar today is going to be the actual reporting steps for your 1095-C, your forms 1095-C. Just a quick update about the costs. Nelco, those of you who have already done this with Navigator know that it's not Navigator itself that is transmitting the reporting. It's being done by a third-party company called Nelco, and Nelco charges a per form charge for transmitting the information and mailing the forms to your employees. Those costs have gone up, I think, by 5 or 6 or 7 cents from last year. Not a whole lot. You see the breakdowns here based upon the number of forms you're sending out. I do want to highlight, though, that Nelco publishes costs for Fed and state filing, but remember, unless you're self-insured, you do not want to send any information to the state of California. So pay attention to that when you're doing your transmission. We will see that screen in a minute here to see what that looks like. Okay, so there's 4 steps to auditing your 1095-C data in Employee Navigator. The first step is verifying that and we're here just for navigation, we're under the ACA tab, and we are in 1095-C reporting, step 1, Audit and E-File. So you just want to verify here that the correct low-cost plan has been checked as the low cost. Only one of your plans should be checked as low cost. If you're offering, say, a bronze, a silver, and a gold, it's going to be the bronze plan. But just verify that those assignments have been made correctly. You also want to just verify that the Part 1 information that goes on the 1094-C is shown correctly here. If you are filing as a aggregated ALE, if you're in a controlled group, all of those companies are going to be in the same Navigator site. And so if you scroll down on this screen in Navigator, you'll see the Part 1 information for each one of those companies come up. And that's it for step 1. Step 2 is fixing any employee demographic and enrollment information or ACA data errors that Navigator is seeing. And the system is great at telling you when there are problems that that need to be fixed before you transmit your 1095s. The most typical is missing ACA data for employees and missing demographic data. The missing ACA data is typically a classification. Every employee in Navigator must have an ACA classification. And the demographic example in this slide is address information. Employees can't get their forms if there's no addresses in Employee Navigator. So you'll want to go through here and just clean up any of this data that needs to be cleaned up. And that's it for step 2. This is where you're going to spend the vast majority of your time, and that's where we're going to spend the majority of the next 20 minutes here in this webinar, is the auditing of your 1095-C data in step 3. The first step is to generate your forms. Make sure you're selecting the correct reporting year, and then click the green button, create preview of your form data, and then you'll be presented with this screen in Employee Navigator. Don't pay attention right now to the orange box where it is showing you that there are some errors on your 1095s. I want to first talk about auditing your 1094-C information. To do that, you click on the hyperlink that says View 1094s. These are snippets from a long screen in Employee Navigator. It doesn't fit nicely on a PowerPoint slide, but I've pulled out the pieces of that screen that you want to pay attention to. So you want to, again, verify that the Part 1 information for the company is correct, and for each member of the ALE Association, if you're in a controlled group. You want to make sure that the other information is answered correctly. Is this the authoritative transmittal? How many forms are being submitted? That's auto-populated by Employee Navigator. Are you part of a controlled group? Are you using qualifying offer method? And so on. This is really important, and this screen is further down on that when you scroll in Employee Navigator. But again, remember I pointed out early on that one of the single most important questions on the 1094-C is, have you offered minimal essential coverage to 95% of your full-time staff, yes or no? And we want that to say yes. If this says no in Employee Navigator, you need to take some steps to correct that. And here's how you correct it. In each one of these months, you would click on the blue no, which is a hyperlink, and then Employee Navigator is going to give you a report for that particular month about which employees are triggering this error. You can then do some diagnosis about your HR facts, and if you know for a fact that, say, Tracy Adams was enrolled in medical coverage for the entire year, you can simply click the override button, which is the include button here, and now that person becomes part of that 95% calculation. And if you do that for all of those employees, it clears the error for that particular month. I caution you again, though, that you definitely want to make sure you're providing accurate information to the IRS. So only do this override if you know for sure that the employee was either offered coverage or was enrolled in coverage, and that information just somehow is not in Employee Navigator. You're doing this on a monthly basis. I'll go back one slide here. On a monthly basis because penalties are assessed on a monthly basis. So you could potentially have a penalty for 2 or 3 months out of the year and no penalty for the rest of the year. That's why this is broken out in all 12 months. But you need to pay attention to any months that say no and go through this step of correcting that error. Okay, that's it for the audit for your 1094-C. Now the 1095-Cs. You may see, when you generate your forms, an orange box that says employees with an unaffordable coverage offer or a non-qualifying offer. This is code talk for there is a problem with the coding on the 1095-C. And you want to pay attention to that, and you want to take some sort of action to correct those errors. I also want to point out on this screen that there's a blue box that says override 1095. If any employees that are in the system were not given a 1095 by Employee Navigator, you can override that and give them a 1095. For example, let's say you had someone who was classified as ineligible part-time the entire year, but they actually were on the insurance and they were simply miscoded. You could override the system and add a form for them. To do that, you click the override. Here, I'll go back one more. You click the blue Override 1095 form button, and when you click on that, it provides you with this list of employees that you could potentially override. You simply check the box on who you want to override and provide a form to, and click Save Form Overrides, and then they will now get 1095s. So now we want to go back to this orange box, employees with problems on their forms. When you click on that orange box, you are then faced with this screen, a list of employees that have errors on their forms. You click the View, the blue hyperlink View button here, and it provides you with that employee's 1095. And then that's another reason why I love Navigator for this audit purpose is Navigator is great about showing you exactly where there's issues. So in this example, you have an employee with 3 months of issues where they've been offered health care coverage. The cost is $150, but there's no affordability safe harbor code here. You would normally expect to see an affordability safe harbor code here, but there's nothing. And because there's nothing there, Navigator is saying, wait a minute, there should be something here. Look at this and see if you can diagnose what the issue is. It's typically an HR data error. When I see these, I'm trying to get my chair, just got a little funky. When I see these errors come up and I help clients try to resolve them, 9 times out of 10, it's either inaccurate HR data or it's missing HR information. That's really the first place to start. If that doesn't work, those of you who have already used the system for this know that you can simply override this and give the system the codes that you think should be there. If you click on the override button next to line 16, it'll provide you with a screen where you can input the codes that you want to see for the ones that have these orange boxes. Once you put those codes in, click Save, then this is cleared, and then this person's form is no longer an error for you. When you're looking at the employees' forms, you can scroll down further on the screen to see what their affordability details are. So in this particular example, that cost at $150 is 3.5%, so it's clearly affordable. So there's no reason why the system wouldn't have put an affordability safe harbor code on that 1095 unless there was some HR data error. I hammer people over the head with this all the time, but Navigator is driven by accurate HR data. If the data is not there, then this whole thing doesn't work. If you scroll down even further on this same screen, it shows you enrollment information for the employee and a hire date and a termination date. So once you've cleared all those, you'll notice that that orange box will be gone. And now you will move into auditing your 1095s. You do that by clicking on the View 1095 hyperlink. And notice here in this example, this is a company that has 2 entities that are in a controlled group in the same Navigator site, and each member has their own 1094 and their own sets of 1095s. So if you're in a controlled group, you will see this kind of arrangement when you're auditing your forms. So as I've stated in prior years of doing this webinar, this is the one area of Navigator that I'm not thrilled with. So when you start to view and audit your 1095s, the first screen you're given is this list of all of the employees, and these boxes for each of the months for each employee, and it's a blue box with an E in it, or it's a white box with nothing in it. The blue box with the E in it means the employee was enrolled in coverage for that entire month, and the white boxes means that they're not enrolled. Beyond that, this screen doesn't give me any information. It doesn't give me any information about the codes that the system has put on the 1095 for this employee. I would love for this to see, I'd love to see the codes on the screen and not the blue boxes, but that's the way Navigator works. In order to audit each form, you click View next to the employee, and then you're given the employee's 1095. Before we get to that, I just want to mention this particular slide. Last year, and I don't know if Navigator's doing this again for 2021, but they were doing this last year. If they are still doing this, pay attention to it. Navigator put up this warning banner that said a state filing is required for the employee. And I'm not thrilled about that because that's not true if you're a fully insured employer. Remember, only self-insured employers have to provide state information to the Franchise Tax Board. So I don't like this warning. It made employers think that they had to do the state filing when they didn't. If this keeps coming up, just be aware of it. Just know that it doesn't apply to you. It doesn't apply to you if you are fully insured. Hopefully they've done away with this. I'll see. But so here's the 1095-C code data for the forms. In this example, Navigator has put some orange boxes around codes that it knows cannot make sense. You have 1H, no offer of coverage, paired with 2C, the employee is enrolled in coverage. Both of those things cannot be true. You can't have an employee enrolled in coverage when they were never offered coverage. Either the line 14 code's wrong or the line 16 code is wrong, but something's wrong here. Again, it's all driven by HR data, so there's clearly some HR mismatch of data in the system. However, the easiest and simplest way to fix this is to override the codes. If you know for a fact that this was an employee that had coverage the entire year, and it just didn't get put into Employee Navigator somehow, you can override that line 14 code and put in your either 1A or your 1E code, whichever applies, depending upon the cost of coverage to the employee. You can also now, this is a brand new feature in Navigator for the 2021 filing season, you can now override the cost of coverage line. In years past, this required an import, and it was cumbersome, and the Excel worksheet was a bit clumsy. Now you can simply go in and override those cost figures, and if you click on that override, you get this particular box where you can not import, but actually input the correct cost of coverage for line 15. I skipped over a couple slides I want to talk about. One is, what do the codes mean? So we've given you the handout today, which has a code sheet in it, but just for a quick reference in Employee Navigator, if you have questions about what the codes mean, or you forget what 1E, for example, means, you click on what do the codes mean, and it gives you this list of definitions here. Also call me. Obviously, if you have questions about the codes, you want to be calling me. Okay. And here's the cost override. Once you correct a form, if you have made corrections, those corrections show up in blue. So that's an indication to somebody else like myself, if I'm auditing what you've done, I know that you've made some changes to your forms here. You use the blue navigation buttons, either previous or next, to get to the next employee's form and do the same process. These are my suggested steps when you're correcting your 1095-C codes, if they need correcting. Ideally, they don't need any correcting. Again, I hammer this point. It's all about the HR facts. The HR facts in Employee Navigator have to be crisp and they have to be accurate. Hire dates, fire dates, rehire dates, pay rates, W-2 data has to be in there if you're using W-2 safe harbor. employees must have ACA classifications. The effective date of class changes, that is often something that causes errors. If somebody moved from part-time to full-time and the change of that is not in the system correctly, the codes will not be correct on the 1095. And then obviously enrollment information, the system will not know if the employee is enrolled unless the system has that data. If you make any changes to the forms in that audit screen, those changes are done automatically, but if you're changing HR data in the system as a whole, you always want to make sure you regenerate your 1095s in order to capture those HR changes. And then of course, you have me as a resource at all times. Call me whenever you have questions about any of this. All right, so that's your audit in step 3. The rest of it is pretty quick and straightforward. You click next when you have finished your audit, and you are now going to go into the E-File portion of the transmission. Before you do that though, if you are a new user to Employee Navigator for your ACA reporting and you have not done transmission with Employee Navigator, you will not have an active E-File account. You have to have an active E-File account in order to use the NELCO part of this. So you click on Manage E-File Account. If you don't already have one set up, it will then ask you to provide a name and I think a email address and a password. It's just that. It's super simple and basic, and once you've done that, then you will have access to transmit the information to NELCO. Also be mindful that sometimes your HR permissions as an admin have not been extended to the ACA reporting. If you find that you're having trouble either accessing the E-File section or transmitting because of permissions, then contact us. We'll make sure you have those permissions established. So once that's done, you click on E-File, step 4. If there are still any problems with your forms, Navigator will again ask you to stop, go back, correct errors before they allow you to transmit. So one great aspect of Employee Navigator is that it will not let you transmit bad information to the IRS. In this example, the system says that we're missing a low-cost dollar amount for line 15. You go to that employee's form. This is an older slide. This area where it says import next to line 15 now says override. So you'll be able to go in and very quickly put in $100 here in September. Assuming everything's fine though, you're going to see this screen here. If you have collected email addresses and you have those emails in Employee Navigator, you can check this box. Employees will get an email saying that your 1095 is ready, and they'll be provided with a link to pull down that 1095. You click the green Transmit 1095 to the E-File provider. This is NELCO. You are now going outside of Navigator, and you're going to go into a brand new web browser window, and now you're going to be in NELCO. Apologies for this really fuzzy slide. I haven't found a replacement. I've had this same fuzzy slide for 4 years. Once everything has been transmitted, it will say transmission has been successful. Please enter your E-File site. Click the green button, and now you're here. The one thing, we're just about done. The one thing I really want to emphasize and focus here on is, again, the state filing. NELCO will present you with options for state filing. When you do your bundles, you want to make sure you're choosing the federal E-File bundle and not the federal plus state. You just want federal, you want recipient mailing, and you want online retrieval. You don't want state. Assuming this is all looking good, you click the next blue button. That gets you to this screen here. If you have collected email addresses for employees, you will see them here. If you have not, you can, I suppose, if you want, go through and add a bunch of email addresses. I don't know why you'd want to do that. It would be very time consuming. You could also go back to Navigator and put that information in there. But if you haven't collected them, you haven't collected them. Employees will get their forms in the mail. Click Next here. At this point, you're in NELCO, remember, you're not in Navigator, and NELCO is giving you a chance to preview all of your forms and check your forms. You've already done that in Employee Navigator. You don't have to do that here. So just click Next here. You'll be asked for a credit card. Click Add a Card. Give it the billing and credit card information. Click Save. The next screen is Pay and Submit. Once you click Pay and Submit, you are now transmitting to the IRS. You will ideally get this: congratulations, you have submitted your forms. You have now completed your ACA requirement. Don't stop here though, please don't stop here. Go back to your filing home, click Form Filing History, and click the little red printer looking icon next to your filing confirmation, and this will first default to selecting all the forms you've transmitted, which you want to have that pre-selected. You click Next, and now the system gives you the opportunity to pull everything off and save it to your local computer. You must do this. Please pull everything down before you leave NELCO. You've got to have copies of all this stuff. And also save it in a place where people can access. I've had a situation happen where an employer had a contractor, an HR consultant helped them with this. All this stuff was saved to the HR consultant's computer that nobody had access to. Last thing I want to talk about is you may get this email, which is shown in the bottom left of this slide, that you have had some error correction that's needed. If this has happened, it means that the Social Security number for the employee on the 1095 does not match what the government has in their computer system, and you need to do some corrections. If you get this email, contact me. I'll give you a guide on how to submit those corrections, and I can help you actually do those corrections in NELCO if needed. But just be aware of this potential email. And you do need to do the corrections. So if you get this email, you do actually need to do the corrections. Some additional resources. IRS has a great web page with information for ALE employers. Navigator has a great video on Vimeo about how to do the reporting, and NELCO has a good video about how to do the corrections. The links to those are shown here. And with that, we are done, and we're done a bit early. I haven't seen any questions pop up. We have some time for questions if anybody has anything that they want to have answered now. While we wait for that, the last screen that I've put up here is that we would love to get some feedback from you about this training session, and Sarah is going to talk to you for a quick second about how that's going to happen.
Thanks, Keith. So thank you, everybody, for participating in the webinar. I just put a link in the chat to everyone. It's just a quick 5-question survey that I'm hoping you guys can take a few minutes to fill out. We know your time is really valuable, which is why we want to make sure that these webinars and any other educational materials we're providing to you are really giving you what you need and what you want. So these responses are going to be anonymous, so please feel free to share your feedback honestly. Whatever you give us, we will use to improve upon next time.
Great. Thank you so much for that, Sarah. And I just want to also publicly thank Sarah for her help and work with these webinars. We've done 2 back-to-back webinars during the lunch hour. And I could not put these on without Sarah's help and her team's help. They do all of the stuff that needs to happen to make these work. So thank you so much for all that work and effort. And we have a question from Kathy. Line 15 is for the employee's cost, correct? That's exactly correct. It's just the employee's cost. It does not include things like dependent cost. It does not include spouse cost. And it may, in fact, not even be what the employee is actually paying. So again, the example of where maybe you have a bronze plan, a silver plan, and a gold plan. The bronze is your cheaper plan. The other ones are more expensive. Maybe the employee has chosen the more expensive plan. That's not the dollar figure, though, that goes on the 1095-C. The only thing that goes on the 1095-C is what was the cheapest possible option for the employee for employee-only coverage. And that's all you're required to do under the ACA mandate, is offer coverage to the employee that's affordable just for the employee. The IRS doesn't care if the employee spent more money on a richer plan. Okay. Well, that looks like the last question. Again, thank you all very much for attending. Please give us some feedback, as Sarah mentioned. I'm giving you back 5 minutes to your day. So there you go. Enjoy the rest of the afternoon, and we'll see you next time.